Hi, welcome to my channel, Second PUC Accountancy. Learn, understand, and excel. In the previous session, we had seen what is a partnership deed. Now, let us move on to the next important concept, that is the special aspects of partnership accounts under the first unit, Accounting for Partnership Basic Concepts. Accounting treatment for partnership firm is similar to the sole trading concern with a certain exceptional features. So the partnership firm has certain unique features, or we call it as special aspects, which we have to look into. So what are these special aspects or unique features of a partnership accounts? First is the maintenance of partners' capital accounts. It is the personal accounts of each and every partner who are admitted into the firm. So we are going to see how to maintain partners' capital accounts under the partnership basic concepts. Second important or the special aspect is the distribution of profits and losses among the partners. So how the profits and losses are to be distributed among the partners is a special feature under partnership accounts. Third, the adjustments for wrong profit distribution. In the past, if the profits are distributed wrongly in the past, how it has to be adjusted and distributed to the partners will be the next important feature of partnership accounts. The next one is reconstitution of a partnership firm. At times, a partnership firm might be reconstituted. It has to be made into a new firm due to various circumstances. In the case of admission of a partner, or a retirement of a partner, or death of a partner. So in such circumstances, how the firm has to be reconstituted will be seen as a special aspect. And the next feature or the special aspect is the dissolution of a partnership firm. How, in the case of a partnership firm has to be dissolved, what are the methods of dissolution, what are the main special accounts that has to be prepared will be seen under this particular aspect. So first we'll see the importance or the maintenance of the important partners' capital accounts. Maintenance of partners' capital accounts. All transactions related to the partners of the firm are recorded in the books of the firm through their capital accounts. Okay, so this includes certain adjustments, that is, the capital contributed by the partners or the capital which is brought in by the partners, the withdrawal, any capital that is withdrawn by the partners, drawings that is made by the partners for their personal use, or how the profits and losses have to be shared between the partners, interest on capital, interest on drawings, and remuneration of the partners. Now let us see what are the types of partners' capital account. Partners' capital accounts are of two types. First one is a fixed capital system, or we call it as constant capital system. The second method is the fluctuating capital system or current capital system. So now let's see in detail. The first one is the fixed capital system or constant capital system. Why it is called as fixed capital system? Under this system, the capital of all the partners will not change during the time of business. It remains fixed year after year, and it will change only when additional capital is introduced by any of the partners or part of the capital is withdrawn by them. So therefore, every year the capital of the partners will be constant year after year. So under this system, there are two accounts prepared. One is partners' capital account, which shows only the capitals of the partners that are introduced by them, and the next one is the partner's current account. which shows all other adjustments. So these two accounts are partner's capital account. Only capitals are recorded. That is the capital which is contributed by the partners and the capital which is withdrawn by the partners. So no other entries will be recorded in this particular account, the first account, that is partner's capital account. The second account we will prepare is the partner's current account. Under this account, all other adjustments. What are these adjustments? Adjustments like share of profits or losses, the interest on capital, interest on drawings, remuneration, it can be salary or commission, is recorded separately in a different account called as partner's current account. So two accounts are prepared under the fixed capital method. So therefore, since in the capital account only capitals are recorded, it will not change, it will not fluctuate year after year, it remains the same. The capital account will remain the same year after year. That is why it is called as fixed capital system or constant capital system. The format of this fixed capital system, the first account we have to prepare is partners capital account. So now let us see the format of the partners accounts under fixed capital system. The first account is the partners capital account. It is the simple ledger account format. You have a debit and you have credit, and on the debit side you have date, particulars, journal folio, amount, and on the credit side you have again date, particulars, journal folio, and amount. So what are the entries that has to be recorded in the partners capital account? As we had already seen, only the capitals are recorded in the first account, partners capital account. So first we will have to start with the opening balance, that is balance brought down, which is considered as the capital which is already invested by the partners in the business, which we bring it down from the balance sheet, the previous year's balance sheet. Okay, so first bring down the opening balance, that is the opening capital. And secondly, we have to bring down any additional capital that is introduced, will be entered on the credit side as by bank account. Okay, and then if any capital is withdrawn by the partners, then it appears on the debit side as to bank account on the debit side. Now, here in this account, only the capital entries will appear. No other adjustments will be recorded. Now find the total. When you find the total, you will get the balancing figure. The capital account and under the fixed capital system will always be on the debit side. So the credit side will be greater. So it is to balance carried down, that will be considered as the closing balance, which will be carried forward for the next year as a new capital. So every year this capital will not change. It will be fixed year after year, as we are not recording any other adjustments in this particular account. The second account which we will be preparing is called as the partner's current account. As we had seen, the remaining adjustments related to partners will be recorded under the partner's current account. Again, here it is the same ledger account format. You have debit and credit side. The heading will be partner's current account. On the debit side, it is date, particulars, journal folio, amount, and on the credit side again date, particulars, journal folio, and amount. So what are the entries? We'll now go on to see the entries. First, bring down the balance. If a current account balance is already given, then it will be brought down as the opening balance on the credit side. And next, all other adjustments as we had already seen. The salary, any partner has to be given salary, will appear on the credit side. Any commission has to be given to a partner, will appear on the credit side. Any interest on capital is charged or has to be given to the partner's capital which is invested by them, will appear on the credit side. And the profits, any distribution of profits are there in the question. The profits have to be distributed on the credit side of the partner's capital account. And next, if a partner makes any personal drawings in the sense he is not withdrawing the capital, but he takes some amount for his personal use, it will appear on the debit side of the partner's current account. And the interest, any interest, if it is given in the partnership deed, then interest on drawings is charged on the debit side of partner's current account. So these are the adjustments which will be recorded in the partner's current account. Now we will balance it on, and any loss also has to be appearing on the debit side to the partners. Profit will be distributed on the credit side and loss will be distributed on the debit side. Now find the balance, get the total. The highest total will be written here and the balancing figure will be the closing balance and it has to be brought down. So this particular account will be changing year after year, but the capital account will not change. So this is the format of partner's current account. So the balance which we will be carrying it forward for the next year has to be brought down on the credit side. Now we will move on to see the next type of partner's account, that is the second system, fluctuating capital system, or we call it as current capital system. Why it is called as fluctuating capital system? Under this system, the capitals of the partners will keep fluctuating year after year. It keeps changing year after year. So it is called as fluctuating capital system or current capital system. Why does it keep fluctuating? As you have to prepare only one account here, that is called as partner's capital account, and all the capital entries and all the adjustments which we had seen, all these entries are put together only in one account, that is partner's capital account. So there is no separate account for capital. So therefore the capitals of the partners keeps fluctuating year after year. So there is a change in the capitals. So how to prepare in this? You see, we have only one account to be prepared, capital account under fluctuating capital method. Here again we follow the simple ledger. We have debit and the credit partners capital account, only one account we are going to prepare. So on the debit side you have date, particulars, journal folio, amount, and on the credit side again date, particulars, journal folio and amount. So here we are going to follow the same format, that is bringing down the balance. The opening balance is to be brought down, okay, on the credit side. That is the capital of the partners which is brought down from the previous year. And next we record all the adjustments also in the same account. Salary will be recorded on the credit side. Then we record the commission. Then we record interest on capital on the credit side. Then we record the profits which has to be distributed to the partners on the credit side. Now on the debit side we record the drawings which is made by the partner. If a partner makes any drawings are recorded on the debit side, and interest on drawings are recorded on the debit side, and any loss has to be distributed, it is recorded on the debit side. So here we incorporate all the capitals and the adjustments together in one account. So therefore the capital account will change every year. As the adjustments keep changing, the account balance also keeps changing. So now find the total and get the highest total and find the balance here. The balance will be called as balance carried down, and that will be the closing balance for that particular year, which should be brought down for the next year. That will be the opening balance for the next year. So now we will move on to the next concept, that is we'll see the difference between fixed capital account and fluctuating capital account. Simple differences based on how we have prepared the accounts. The fixed capital account, the capitals of the partners are fixed year after year, and Under fluctuating capital system, the capitals keeps fluctuating. Since under fixed capital account, we record only the capitals are fixed every year, it will not change. And whereas in the case of fluctuating capital system, we prepare only one account where adjustments as well as capitals are recorded. So the partner's capital account keeps fluctuating. The second difference between these are under fixed capital system, we maintain two accounts. As we have seen, we maintain two accounts under fixed capital system. One is partner's capital account and the other one is partner's current account. Capital account to record only the capitals and current account to record all the adjustments. Whereas under fluctuating capital system, we record all the adjustments and the capitals only in one account, that is called as partner's capital account. And the third important difference is that under the fixed capital account or fixed capital system, the capital account always will show a credit balance, whereas the current account will show credit or debit balance as it keeps changing. Whereas the capital, it does not change, so it always shows the credit balance. Under fixed fluctuating capital method, since we maintain only one account here where capital and the adjustments are recorded together and which keeps changing, the capital account can show a debit balance or a credit balance. So this is the difference between fixed capital account and fluctuating capital account. Thank you.